Greetings, everybody. It is Friday night, about 7:30 on, today's holy cow, the 21st of May already, Dano. Wow. Already almost halfway through the year.
No joke.
Tonight, what we're going to talk about is we're going to give a couple of what we're looking for next week for selling puts. But the first thing that I want to review is getting some comments from people who don't seem to understand what we were talking about on the last video. And I'm not going to go into that here because we're not really going to try to teach somebody how to trade on YouTube. I guess.
No, agreed.
You know,
it just seemed like, and we're open to comments, obviously, and we're open to criticism where constructive criticism where it makes sense. Absolutely. I think the biggest thing to get across is we wouldn't in no way, shape, or form, in my opinion, disparaging or criticizing in a negative manner anybody.
All right. Well, let's not go down this rabbit hole.
Yeah.
Okay.
Yeah.
But all I'm saying is the people who are leaving negative comments had no clue. They either didn't watch the video or they were too busy trying to talk before they listened. Okay. Bad combination. Bottom line is the only thing that we were commenting on is one aspect of what Manarino sent out. And he sends out trade ideas, and we were commenting. I was commenting, I won't put Dan in this. I was commenting that I have never seen a good trade come by email. Okay. I never said that the guy never gave any good advice or suggestions. That's not what I was saying. So for the people with ADD or mental disorders, okay, go elsewhere. Okay. You don't need to leave a comment. You don't need to watch. Just go bye-bye. Okay. See you. Bye. All right. So for anybody who really is interested or wants to make money or suggestions, hey, that's what we're trying to do. So if somebody else wants to lose money or somebody wants to try to pick up $6 to bet 13,000, good luck. You're going to need it because it's hard enough when you actually guess things right. And when you get things right, you don't want a return that doesn't even compute on a calculator. So, okay. So what I wanted to say is I was talking to Dan before we hit record is the beauty of selling puts is one of two things. Okay. And the whole reason of selling puts is you're selling puts on stocks that you want to own. You're not selling garbage. So for example, First Majestic, I think it's in a very good trend right now. I would want to own it at the right price. And as Dan and I have talked about many times, whether you make money or not is dependent upon what you bought it for. Right, Dan?
Important.
So by selling puts, you can lower your cost basis. So if First Majestic is selling for $17.50 today, okay, it's possible that I could sell a put and I could actually enter First Majestic for several dollars below that price point. That's the beauty of selling puts. So for example, there are some trades that I did before. Like for example, Silvercrest Metals. I had sold some puts a couple months ago. I sold $10 May 21st puts. Okay, $10 strike. Today was the expiration. I collected over $3 in premium per contract.
And what was the strike again? Sorry.
$10.
Very good. Excellent.
It closed at $9.50. So I'm going to I had a chance of closing that order and taking the premium that had collected, or I could take possession of those shares. And that's what I elected to do. So I'm taking each contract, I'm taking 100 shares of Silvercrest
Mhm.
for $10 each. That's what they're charging me. But I'm getting a discount of over $3. So
30%.
basically my cost basis is like $6.85.
Oh, it's under 7. Wow.
Yep.
That's awesome.
And the price of the stock today is $9.50. So I could, on Monday, I could sell them. I could sell a covered call because now I own those shares. Or I could just let it ride and do nothing. But in an uptrend market, this is where you really can make some money, is by selling puts, being aggressive, getting exercised, and then turning around and selling covered call. Now, the danger is the market goes like this, and then you have to hold those shares. So you only want to buy stocks that you want to take possession of the shares. You don't mind holding them indefinitely.
Yeah, if you're going to sell a put, right, a naked put is what it is. You better have the cash to be able to buy them on the price movement, the wrong price movement, right?
Well, this is something else we can talk about another time, and that's cash management. There's all these different things, how to sell, when to sell, cash management, return on investment, all these pieces. And nobody's going to understand all of this day one. And that's why you start with a very small piece. So, okay, so selling a covered call is very beneficial. And if you get into a bull market where the trend is up, okay, and I think that's what we have going now for precious metals and the miners. It could reverse, but that's what I believe. You have to make your own beliefs, your own assumptions, your own rules, and that will dictate how you trade. So one of the most effective ways is to sell puts. And we'll go over a couple trade ideas that Dan and I are going to look for next week, because next week is the end of the month. And normally what happens is the powers that be typically beat down silver and gold. And so a lot of people get scared, but it's actually a buying opportunity. And the rule of thumb that Dan and I use is when the price goes down, okay, then what do you do, Dano?
Sell a put.
Sell a put. When the price goes up, sell a covered call. Because what happens is the premiums you're getting and the entry points for it are superior. So let's say First Majestic next week gets beat down to $16.50. Then that's an extra $1 off the strike price for the same premium, basically.
Yep.
So it lowers your cost basis is what it does.
Could be
the same premium.
Absolutely.
Okay. And the other thing that I do, it's something that I've coined this term, and I think it's a pretty good visual, is I call it building my army. And one of the things that I do is when you sell a put and you collect a certain amount in cash, what you can do is you can turn around and then buy shares or buy calls on certain stocks, because what you're doing is you're credited with that money. So you can put that money to work right away if you want. So there are many miners that don't trade options. So these small little juniors that are very volatile, in a bull market, they can make 5-10 times returns quite easily. So if you collect $100 on selling a put, for example, you can use that $100 to buy those shares. So what you're doing is you're financing building your own army.
Yep. You're using the premium proceeds, if you will, the credit from selling the put to then in turn fund buying shares.
So if the shares actually get a haircut or, God forbid, go to zero, it really didn't cost you anything.
Yeah, it's sort of a beautiful thing.
Yep, but it takes patience.
It does, grasshopper.
Unless you have $1 million in cash sitting there, then you can do it much quicker.
Good time.
Right. So, so really that's a good thing to remember is if the stock price drops, sell a put. The stock price goes up and you have shares, sell a covered call. And we can always go over examples on how we pick and choose strike price expirations. It really depends on the premiums, the volatilities, because at certain times the premiums are garbage, and at certain times, like when I was down in Mexico, they're in that short squeeze. First Majestic spiked, and I called Dan. I'm like, "Oh my God, First Majestic is offering $2,500 in premium a contract," and instead of me taking, basically doing the order, selling those the covered call, I was talking to Dan, and then when I finished, it was gone that quick. So I missed it because I didn't have my priorities correctly. So I ended up selling, but I didn't get the peak there.
Damn it.
So if you see it, grab it and then talk to Dan about it.
Oh.
Yeah.
Kung Fu reflexes on the keyboard.
Yeah. So it really comes down to it comes down to, for me, I'm not afraid to take possession of shares. So I'm looking at entry point, which comes down to premium. And I don't mind waiting 2 or 3 months if I think that it's a good stock.
Yeah, if you're willing to own the stock, that's the key. If you're not willing to own the stock and you think it's junk and you don't believe in it or don't know really much about it at all, you shouldn't be selling a put against it. You really should.
No. All right, Dano. So this is my trade idea for next week. Now, Metalla, we've been selling some covered calls in Metalla. As Dan knows, I've been bullish on Metalla for at least, well, several months, but their price got punched in the face when silver and gold got pushed down. Metalla was around $5 last year when it pushed higher, and it got up to around $13.50, I believe, and then started the trend down. And I think it got down to around 7.5. And that's when I started jumping in. But even still right now Metalla back then a year ago, it wasn't trading options. They've only started trading options recently. So the premiums are much better than normal. So I'm just going to show a couple ideas here.
Okay, let me explain what this means. And I'll highlight that in the form of an example here. So if we choose June 18th, which is 28 days from now, and in the center blue, you see $255, $750, $10, etc. If Dave, let's say, for example, chooses, say, a $10 strike.
Okay. Which comes up at the top.
Yep. To the right of it, you see 50 cents and 65 cents, right? A bid and an ask, which is basically a sell and a buy. It's the midpoint that you want to be concerned about here, which is 57 cents. So what that means is if you execute this and they actually pay you premium of 57 cents, you can deduct that from the $10 strike price. That would equate to your cost basis of $9.43.
Because all we're doing is we're assuming that somebody understands how to trade options.
Yes.
And then we can discuss different trade ideas. Because
Exactly.
I've had multiple people start saying, you never want to sell a put. You only buy puts.
Not true.
And I was like, okay.
Not true.
If that's the level you're at, then you don't need to comment. Okay. You need to buy a book. And I'm not being mean. I'm not being harsh. I'm saying, we're not going to hold your hand through that stuff. I mean, we'll discuss why we're picking certain things, why we think certain trades are good trades at that level, but we're not going to get into explaining how you actually select a certain button.
Yeah, because that's extremely rudimentary and we have to assume a certain level of knowledge. Otherwise, we would call this the video 101 options.
Yeah, I mean, you'd have to, would have to have a very basic options
Yeah,
course.
you'd have to start at an extremely fundamental or rudimentary level, the basics, 101, the first time you've ever even seen this.
Okay,
So,
but I'm just going to dive right into this trade idea. Okay, but basically, the expiration date, obviously, as you know, the expiration date, the further out you get, the more premium you should collect, because the more time that you give, when you sell a put, you do not control the legal contract. The person who's basically on the other end can exercise that at any time. So just because I'm selling a put out in July, or if I go all the way out to November, they could exercise it tomorrow. They have the power, because whatever premium I select, I'm targeting getting possession of those shares. That's what I'm thinking. I'm taking possession of those shares. I want those shares.
At a lower cost basis, instead of buying them outright with cash up front.
There are other times that you use it as a hedge against another trade. But when we're talking selling a naked put like this, that's the whole reason, is to take possession of shares. So right now, the reason that's good is because, look, Metalla right now is selling for $10.42. So if you were a believer in this company and you thought that they were going to $13 to $15 to $20, right? You could buy shares right now. You could say, I want to buy 100 shares of Metalla and I'm going to spend $1,042, right? Or you can say, I want to own 1,000 shares, and depending on what strike price I pick determines, so I could select the $12.50 price and say, I want to spend $12.50 on those shares. And some people will be like, why do I want to do that? Like Dan and I were just having a discussion about this. And the bottom line is you might want to do that, because if I believe that Metalla is going to $15 by the end of July, let's say that's what I'm saying.
Yeah.
Then why wouldn't I say, okay, I'm going to select a $12.50 or a $15.
$15 for that matter.
Yeah.
Which would give you almost $5 in premium.
So the cost basis, we'll just say $5. Now, the other thing I want to say is, if I believe that there's going to be a push down in the price of metals and miners next week, I'm not going to make the trade today. I'm going to do it next week for these out further. Now, if my expiration date is only a month out, then waiting a week will make a difference. But if my expiration date is out in July or August or September, then 1 week's not going to be a big deal. So what I do is I can basically say right now, like I could go in and say, I want these shares, or I want this contract, but I want this if it gives me $6, right? So if I think it's going to $6, then I'm going to say, I'll take this contract for $6. And instead of a day, I just put it in at, you can put it as day only, or you can go good till cancel. And it will stay in the system. And so if I take possession of these shares, I take possession at $9. So if this thing goes up to $14.42 on July 16th, I take possession of these shares at $9.
Well, your cost basis is $9, is what you're saying.
That's correct.
I mean, you're going to pay $15, but you already received a premium of $6 ahead of hand. So it's 15 minus the 6 in premium they gave you to give you the $9 cost basis. That's a beautiful thing.
Yeah. Yep. You would do that all day long.
Beautiful.
So the other thing that I said in a previous video is one of the things that I use selling puts for is, if you have $20,000, $30,000, $40,000 sitting in a bank account, and I looked online today when Dan and I were talking about the 6-month CD rate is 0.6% annualized rate for 6 months. So
What a joke.
what did we say? $50,000 was $32 they pay in interest in 6 months.
Use 100K or 50K. I forgot.
Yeah, I forget what it was, but it is $30.
It was obscene. It was obscene.
And so if you wanted to take $15,000 and go out 6 months,
There's your CD,
right?
so to speak.
There's November, that's 6 months out.
Yep.
Okay, I could go $15. I could do 10 contracts. Okay, and
Let's say you only get a $5 premium.
well, it's paying $580 right now, so we're gonna
Okay, so say
we're gonna
6.
use
All
we're
right.
gonna just use the price that they give us just as this example. So for let's just go to a calculator here.
580 divided by what?
Hold on, this Mac is so we'll just say $15,000, right?
Yeah.
$15,000 times 0.006 is $90 in a year.
Yay.
So in 6 months, it's $45.
Hooray.
$45.
But with this,
Yep. So with this, in 6 months,
drum roll.
if the price of Metalla is over $15 in November,
Mhm.
you will collect $5,793. Right? Divided by 15. Well,
I did 5.8 divided by 15. I forgot the commission. But that comes out to 0.77, 77%, right?
well, it's right, annualized. So 2 6
Times 2.
periods, that's 77% annualized return. So if you wanted to be ultra conservative on this, very simple, you just choose a lower strike price.
Mhm.
So instead of the $15, you can say it's at $10 right now. We could do a Dan here. We could wear our skirt and go $7.50.
Yeah. But yeah, okay, 750.
And what's the difference? What's the difference here, Dano?
Yeah, I wouldn't do quite that low, but that's fine.
Well, you could do 20 contracts instead of 10 for your 15 grand.
You could double
Because
up.
it's half the price. So this is saying 77 cents.
Yeah.
Okay, so you'll see in this case, what did we collect? 5,800 before?
Yeah.
This time, we're only collecting, 1,500. So it's 10%. So that's 10% for 6 months, which is a 20% annualized rate. It's actually more than 20, but we're just using rough calculations.
Yeah. So even at 20% versus what was it? 0.006 or something?
0.6% versus 20%.
Yeah.
Now, the chance of Metalla going back to $7.50, could it happen? Yes. Is it going to happen? No. But, even if it did, you'd be in at a cost basis of $6. So,
Which is fantastic.
yep. So you always want to accept the fact that if you're selling a put, you could take possession of these shares. Otherwise, you're not trading it.
Right.
So that's why me personally, I try to choose as high of a strike price as I can, because because what you're doing is you're capturing possible moves. Let's say Metalla, let's say Elon Musk comes out and says, buy Metalla, right? And it goes to $100.
Mm-hmm.
Then I'm going to be, if I chose a $7.50 strike price, I'm going to be disappointed when it goes to 100, right?
Big time. You may want to go up the chain a little further.
Yep. Okay, so you'll see you're collecting $8 instead of 78 cents, which the cost basis would be $9.50 instead of $6.72, right?
7. Okay. Yeah.
$7.50 minus 78 cents is your cost basis if you get exercised.
Yeah.
So what you're doing is you're taking more risk, but you're getting higher rewards. And that's what everything in life is, risk versus reward.
Big time.
So I guess that's a good way to wrap it up.
Yep.
That's what the beauty of margins does, is it allows you to play conservatively. And if for somebody who has a lot of cash,
Yep.
who's just looking to replace interest, you can do it very safely. Very safely.
Totally.
Or you can take a gamble and actually make excellent returns.
Yep. So if options are done correctly, just to end on this note, because a lot of people say options, oh, I don't want to go near them. Oh, those things are, no, if you're doing it correctly, they can be a great instrument to utilize without taking on crazy risk. And,
why we said that selling put is probably one of the safest trades you can do.
It's a very conservative
because you're either collecting the premium
Yeah.
and not taking possession, or you're taking possession of shares at a very low rate.
Yes, at a low cost basis.
That's right. So this is the trade that I would look for next week when silver and gold get pushed down. Dan, before we close, what was your trade? Just give me the symbol and the symbol.
I was looking at MUX, MUX.
MUX.
Yeah.
Really?
Yeah.
Okay. What date?
July 16th, $2 strike, paying 70 cents.
What I do is I always look at different expirations. I'm going to look at June as well.
Mm-hmm.
Okay, so the spread here. So why July?
Well, June would probably be good too, to your point, right? Because
No, not necessarily. It depends, because MUX, what is your objective here with this trade?
Well, I'm not afraid to take possession of the shares. On the other hand,
what is your objective with this trade?
I don't mind taking the shares on.
What is your primary objective with this? We've already established that you don't make the trade unless you're willing to do that. What are you trying to do with this trade?
I'm getting a lot of premium and I'm getting a high rate of return. Over 2 months, I'm getting about 35%.
You're not answering the question, Dan.
That's my primary focus. In this case, to generate cash flow.
Yep. So the bottom line is you're not trying to take possession of shares, is what you're telling me indirectly. You're trying to scalp.
Yes.
Okay. So if that's the case, then the only way that Dan really makes a good return is that McEwen mining goes above $2. If McEwen mining stays at $1.40, then he's going to get exercised, or, that a certain amount of that premium will go into his pocket, but not all, in essence, you're going to take possession of those shares at roughly 140, because it's roughly 70-cent premium.
If I get a 70-cent premium, I would take possession at $1.30, right?
$1.30, right? $1.30. So it's 8 cents.
Yeah, which is under.
To be quite honest with you, I don't get out of bed for 8 cents.
Yeah.
Unless it's like a 4-hour or a couple day trade,
Yeah.
But if I'm going out a month or two, because you have to tie up $200 per contract. So my guess is you'll trade at least 10 contracts.
Yes, or $2,000 to collect 700. Yeah.
You only collect that 700 if it goes to $2. Now, with McEwen Mining, long story short, okay, they have really done poorly over the last couple of years. So, but the owner of this company is very much respected and revered. And so that's why people tend to pay a premium for the stock. So the first sign that they have good news, this stock will probably go to $4 once in a bull market. So a $2 bet isn't a bad bet. But you know, if you wanted to collect this, you might want to go further out on this. If you want to take possession of shares at $1.30, fine, but you might want to consider like July or August instead, which will give it time to play out. Now, the negative of that, me personally, I wouldn't make this trade. I wouldn't make this trade. If I was going to do mucks, you know what I would do? I would do $1.50 August or July, because look at the price of the stock, 138. And if the price gets pushed down next week,
yeah,
I would try to sell. I would try to sell July or August for 35 cents.
Yeah, no, I agree. That's a good one as well.
You're more likely to collect the premium and not be exercised.
Yep, agreed.
Okay. For now, we'll just start with one idea each.
Perfect.
So we'll see how next week plays out, but those are the two that we're looking for. Now, strikes can change, expirations can change, but these are two possible good ideas. McEwen, it's more risky than Metalla, in my opinion.
Agreed.
So, all right, Dana. Well, thank you very much. Happy Friday to you.
Yep, likewise.
And if anybody has any questions or comments, go for it. We're just trying to offer our 2 cents. If anybody has trade ideas, please leave them below. If anybody has certain questions, if you want recommendations on reading material,
Yep.
We can give that as well.
Thank you.
All right.
Thank you so much.
Enjoy your ice cream.
Thank you. Okay, I'll catch up with you. Thanks.
Peace.